Hey, what's going on, guys? So in this video, I want to give you guys a full breakdown of understanding execution of trades and just, the trades that we're taking and why, and, how to be able to capitalize on them moving out the way. So, for example, this is gold right now. This is one of the main pairs we trade. All right, I want you to kind of see what our intraday looks like where, we're risking 240 pips, looking for 500. That's a 1 to 2 risk reward. Right. So when I look at a trade and when I'm thinking of a trading component, I'm going to go ahead and write this out for you guys. Right. And it's the trading component. Right. Number one is proper risk to reward, meaning that that's a 1 to 2 risk to reward, 1 to 3. And on intraday, that's 1 to 4 risk to reward or greater. Number two is key levels, right? What's our support, resistance? And number three, sessions. So whether this is London, New York, or Asian session, right? These are our main trading components. Now, let me delete this real quick. When I set out a trade, right? Trade sample, I'm either going to say buy XAUUSD now or buy XAUUSD, and I'll give a level. Let's say right here is at 40.24 to 40.22. Automatically, your stop loss needs to be at least 60 pips, right? And I'll map that out so you can see what that looks like. Sometimes when I'm just saying, hey, buy XAUUSD now, it's because the market's actually pushing and I'm trying to get us a sniper entry. Or if the market's higher up, let's say the market's at 40.34, I'm sending buy at 40.24 so that once the market, let's replay, let's say the market's here and I see the market coming down, I'm looking for this. So at 40.24, which is right here, see how it's lined up, 40.24, and my stop loss will be 60 pips, which is here, and my target would be, let's say, 100 pips. Now, when I go down to the 5-minute time frame, we can see this a lot easier and better. 40.24. Stop loss on average is 60 pips. You should never lose more than this, right? Never lose more than 100. Never should be a trade and your entries up here. That trade is no longer valid, right? That's why we have our stop loss. Stop loss is, I'm gonna write it out. Stop loss is to protect capital, right? So always keep this here in your mind while you're trading. The stop loss is to protect capital, right? Now, sometimes price will dip in lower than your entry. Doesn't mean the trade's not going away. That's why we have a stop loss, right? So 60 pips on the stop loss goes here, and the entry goes here, right? So this could be the market again ready to push down. I want to buy at this level because I see that this is our key level, right? Potential key level to catch reversal. Well, and this is one of the trades I sent out on Friday. So now we're going to play this a little slow and we're going to watch the market get to our entry. All right, still not there. Okay. Pushes up. Nice. Comes back down. Boom, right there. Okay. So price is now wicked our entry. It came up and it ran 40 pips. came back down, came back to entry. A lot of times when price hits and it goes up and opens up and goes, we're already moving this trade. So this would be like trade 2, right? After 20 to 30 pips in profit. Why? This makes this risk-free trade. And when you're using larger capital, this is what's super important, right? So trades that break even. Now, a lot of you may ask, hey, what if it goes up and we don't take profits, it comes back? You have to watch to see how it respects this area. So let's play it out. It obviously respects it because that's a trade we took. Boom. This is why you would have said, hey, all it did was go back to the same 40 pips it gave us. All right, well, this is now 50 pips. So now at this point, this stop loss needs to come here where it says 0, which means it's at break even. Right, and then now we watch the rest of the trade play out. Okay, it went up. Boom, it's stopping at 40.32, came back down, gave another wick, but we'd already been out of that trade, and then it eventually hits that 100 pip TP. So it also went past that, giving us more than almost 140 pips. And if you guys look in the Telegram and look at the signal for buy at this level, this was a trade we took, but you could have entered multiple times. But even though for the first move, you would have made 40 pips, the second move would have been 50, and it does come back and retest to finally go 140 pips. So price touched this area multiple times, right, which is an indication that price is going to stay at this level, right, which is 40.21. So at 40.22, 40.23, 40.24, your entries are still valid. And then once they're in profit, you're moving your stop loss that's over here up like that, right? So that's super important to remember and just keep it to your forefront when you're trading, because you can't control how many times the market like retests the level, but we can understand and respect if the market's not planning to go any lower. Now, I want to call this the do's and don'ts. Number 1, do not enter if price is past 20 to 30 pips. Why is this important, right? Because sometimes the market moves and you might not see the notification right away. And this will stop you from getting a bad entry. Just wait for price to retest this level. Right? Number 2, do not close full position when in profit. Always take partials. I've made 5K on one trade from the runner because I didn't fully close out. That's an amazing reason why. Number 3, right? Try your best to not be multitask. The market moves fast, right? So sometimes you get into a trade, you're not watching it, and you don't put that stop loss, and the market drops, right? And your stop loss is not there. So instead of hitting your stop loss, now you're gonna essentially risk more capital, and the price continues to run. Now you have a trade that's running that should have been closed or hit from your stop loss to mitigate your risk, but now it's not. Number 4, do not over leverage. 1 to 2 entries around price is fine, or multiple entries with calculated risk. Right? So if I'm at 40.21, 40.22, 23, and 24, that's about 40 pips of entries. I can have a 0.10, 0.10, 0.10, 0.10, but I won't have a 2 lot because now I'm running 8 lots. If the market drops 100 points and I don't have a stop loss, 8 lots is a lot of risk at 100. That's 8 times 100. Versus if I have a point 10, point 10, point 10, and then I see a reject and I put a point 50, I only have one lot running in this area. So once price moves up, I can start to go to break even, and then I'll wait for TP. Risk management is super important. That's the number one trader. You can catch all the setups, but if your risk management is shit, at some point in time, you'll face the consequences. The only time I'm adding multiple entries or I'm using bigger positions is if the market's in the scalping where we've been in a level, and I'll say, hey guys, we're scalping. So, when you're scalping, it's okay to increase risk as long as your account size is good. Your account size is not good, you shouldn't be risking more. Now, you can get on runs to flip your account, but your aim should be 20, 30 pips take profit, 20, 30 pips take profit using a 0.50 or a 1 lot or 2 lot. You should never be trying to use the 2 lot to catch a whole range and then having 100 pip stop loss, because you're going to lose more than you win on that. You're going to have a tighter stop, and once it's in profit, go to break even. And then once it's up 20, 30 pips on those larger lots, take partials and reduce it, and then let the rest run. Also, one of the biggest parts about trading, and I'm going to go ahead and save this image as well. This is what I want to show you over here. And I call this understanding risk management principles. Now, luckily, our accuracy is about 80% or greater, which is great. All right, this allows us to be profitable. But now we need to identify this. So let me break that down for you. Let's say out of 10 trades, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Out of 10 trades sent, you're using a 0.50 to a 1 lot per trade. First trade goes break even, you don't make anything. Second trade, you only get 30 pips. That's 300. Third trade, you only get 20 pips. That's 200. The fourth trade, it hits the stop loss 60 pips. That's minus 600, right? So at this point in time, right, with 4 trades in, you're minus $100. Now, if you were to use different lot sizes for all these trades, you won't have this accurate number. So if ever you see in my chart or my trade history, it's always the same lot size, right? Or the same number, because you have to understand trading is about consistency. You're gonna win and you're gonna lose, and sometimes you win small, sometimes you win big. But if your number is always the same, it's easy for you to calculate how to get back to where you need to. Now, okay, I'm minus 100. Now, let's say, okay, for whatever reason, take another 60 pip stop loss, right? On the 5th trade. So now your minus 100 turns to minus 700, right? Okay. Now, 3, 4, 5. This is out of a 10 trade. Now, granted, I've never seen something that crazy, but it can happen, right? So now, let's say we get in another setup, and most people are like, oh, well, I lost 2, I'm going to lower my risk. Well, what happens when this next trade goes 120 pips, right? And you make $1,200, right? Now, you go from minus 500, right? Plus 1,200 positive is what? And now you're both plus 500. That could be in a day. Then Now, let's say your next trade, you go plus 30 pips, is another 300. Loss is $1,000, right? Minus. So, watch this. So I'm just showing you how this can be easy. So we're plus 500, but then, right, we make 300. So plus 500 plus 300 equals plus 800. Lose $1,000. Now you're minus 200, right? But now, you see how the numbers are still the same after 8-9 trades? And to lose 3 trades overall, right? But now let's say this next trade is a 300 pip trade, which is what you see as catch, right? That's $3,000, right? And I'm showing you why the numbers make sense. So you went from minus 200 plus 3K equals, you're up plus 2,800. Now let's say on the 10th trade, even if you lose just 100 pips, which is minus $1,000, guess what? 2,800 minus $1,000 equals plus 1,800. This means that out of 10 trades plus 1,800, you are still profitable. Now, I know most of you might be having a wow factor, but this is how trading works, especially when you're using like a 0.50 to a 1 lot and you're following your plan of a 60 to 100 pip stop loss, but your TPs are open, right? Because you're some days you get 30 pips, some days they break even, 20 pips, 60 pips. But the ones that run 120 pips or even 100, you can still walk away with good money. That's how trading works. So even if I lose 1, 2, 3 trades, right? Here's another way to look at it, right? Let's do loss to win. Even at 70% accuracy, right? That means out of every 10 trades, I lose 3. Pretty normal, that can be, right? We're a lot more accurate than that, but I'll leave it at that. So if my stop loss is 100 pips over 10 trades, that means my risk is 1,000 pips. But my reward is open. Let me show you how this breaks down, right? So 3 losses with my Luna is anywhere from 180 to 300 pips loss. Now I have 7 trades that I win, and if even at 7 trades, let's say my trades, all 7 trades went 50 pips, 7 times 50 is 350 pips, right? And win. The difference is 2 pips profit on a 1 lot at 50 pips. That's $500 profit. That is 500, and that's 500 a day. Even in a week, 500 times 4 weeks, that's $2,000 a month of profit. This is the core of trading, right? So don't be afraid of the lot size. Be afraid of the risk management, right? You can't let your trade lose 300 pips because you're afraid to close, and then the next 4 trades are bangers, but they only go to 300 pips total. Then guess what? You're stuck at a break even. Versus if you had cut your loss and just wait for another entry or another setup, 9 times out of 10, that first trade that you get in that makes you that money back already puts you at break even. Any other trade after that you're profitable in, well then guess what? Boom. Now if you do this times 2, you go 1,000, you go 1,500. So it's not about being afraid of using the bigger lot. It's about your risk management, right? 50 pips, right? A one lot, that's 500 risk. If it goes 200 pips, you're at 2,000. Now you're up 1,500. It's like you are paying to play, but you have to get out of that psychology of like go small on winners, and then the trades you want to go big on are the trades you lit. That's gambling. That's inconsistency. Use the same lot size for every trade, right? So if it's a point 50, it's a point 50. If you have to break the point 50 into two entries or break the one lot into three entries, you can do that. Point 33, point 33, point 33. But don't go one lot, lose, and then go point 10. You'll never, if you do that, it's going to take you 10 trades. So another quick math, real quick. Let's say quick math, right? A one lot is equivalent to 10.01. Sorry, to 10 point funds, which are mini lots. A one lot is equivalent to 5.20s, which is also a mini lot. Now, one lot is equivalent to 0.05, which is a micro lot. So when you look at the numbers like this, all this means is that if you do one lot and you win, you have to do 10.10 to equivalent one lot. If you do 10.10 or 10 trades, but one trade you one lot, you got to take 12 trades to really see something. Imagine you do one lot and then you do 0.05. You have to do 20.05 versus if you just did one lot versus one lot, or a 0.50 versus a 0.50. So you're making it harder on yourself where you capitalize on setups, but you're not calculating the pips, right? Whatever that one lot loss is, you have to now equivalent to make that back. But if you break down into these lower numbers, it's forever. Like, for example, if I do 1.05, I do a 0.10, half of the position already made back what I lost from a 0.05. It's the same thing. This is just math. It's just conversed. So if you use everything I just taught you in this video, this is going to help you sharpen your trading and be more efficient and more effective, right? But it's a numbers game, right? This is how you stay in the game and you're able to capitalize. So yeah, hey, you may miss one trade or miss one setup, but most importantly, you'll be fine because this is the information that's going to allow you to structure your trade, right? And you have to trade with a plan, trade with a vision, right? The trading is not guessing; it's all technical analysis and numbers. I'm gonna do my part and send the bangers. And if you miss some of them, hey, you miss some of them. But if you follow this risk management, you will absolutely be profitable. Especially if you start to give yourself more room to make more money, right? 0.05s and 0.03s and 0.01s aren't going to change anything, right? You have to think of it like this. Like, look, 0.03 to 0.06. This is going to be your lunch, phone bill now. Right, I'm just showing you like perspective so you have it. Phone bill. Right? 0.07, 0.10. Now this could be like your insurance. What else? Groceries. Right? Subscriptions. No, I'll put subscriptions in the first one. Like, you need to be trading with a goal of how do you want to like live your life, right? That's kind of how you want to put this right here. I'm gonna call this trading perspective. Right, groceries, miscellaneous. We spell miscellaneous. There you go. All right, now your 0.10s to 0.20s. This is actually like bill money. You can even, depending on the trades we send, this is shopping money, right? This is bill money. Now your 0.40 to 0.60. This is now potentially rent. This is also now potentially like our note. All right. Or also 0.60. This is like everyday spending, right? And this is like credit card debt elimination. That's what I was doing. When I had debt, it's like, yo, boom, you're making 300, 400, 250. Now, once you go to like 0.80 to your one lot, this is where you start to see your lifestyle change, right? Now, when you're touching, 800 to $1,200 a day, in a month's time, then of course, 2 to 5 lots is generational. That's vacation travel, like international. I'm putting international. That's like, okay, South Africa, Morocco, now Dubai. That's what I'm doing, right? That's that. And then of course, 10 lot is retirement. If you have enough capital and you can start, dropping 10 lots, retirement, never work again. Oh, and then also, even here at 800 a day, this is where you can actually quit your job or like transition, quit job or trade full time as well. And then at 2 to 5 lots, this is international, but this is also like investment into businesses and entrepreneurship. I can't even see what I'm typing. So that's trading perspective, like 101. This is what's going to put you in a different bracket. Same trade, same signals I'm sending, same everything. This is just the lot size changes your situation.